I'm Owen Bigland. This is the Inside Edge video blog. Okay, headline in one of the newspapers here in Vancouver. Homebuyer sentiment shifting in favor of pre-sale market. I went on to say the opportunity to lock in a real estate investment for the future while avoiding the impact of today's higher interest rates is pushing more buyers into the pre-sale market, says one expert. Won't name his name. Home buyers do believe that pre-sale is a strong opportunity today, and they believe that because they can lock in today's price and they can avoid today's interest rate, says this expert, it's a compelling buy. So I'll give you my opinions on this. First off, you guys know I'm not a huge fan of pre-sale. It used to make a lot of sense. I used to buy pre-sale. I used to buy assignments all the time for myself, for my own portfolio and my clients. But things shifted about 13 or 14 years ago. You used to be able to buy pre-sale way below tangible. It was 5% down. You could assign it at any time, no fees attached to the assignment. You could put it on the MLS. The time that you put your 5% down to the time you got your keys was a fraction of what it is today. Now these times are 4 or 5. There was just one in a luxury condo in downtown Vancouver that was over 6 years from the time they put down the deposit till the time they got the keys on it. But first off here, I would never base your purchase. Buyers today can lock in today's price. Well, today's price on a pre-sale, as I've told you guys before, is above tangible product. When you include the 5% GST, you're paying more now for that pre-sale than what you are for a 1-year-old, a 2-year-old, 3-year-old condo that's tangible without the GST. So you're locking in a higher price today, not a lower price. That's the first thing you should remember. But the opportunity to lock in today's price, and they can avoid today's higher interest rates. So the gist is, I get the keys on it in 3 years or 4 years and interest rates will be lower. Well, you don't know that. I would never base a purchase on a pre-sale based on the fact that I buy today and by the time I get the keys, the interest rates are going to be lower. You don't know that. The interest rates could be higher than what they are today for all we know. Anything can happen. I mean, yes, I know, I've blogged about it. A lot of experts and economists are saying in 2024, we might start to see some interest rate decreases here. Quarter point here, quarter point there. Maybe even as early as later in 2023. Although that's starting to get a little bit changed now too. Of course, inflation is getting harder than anyone thought to tamp down here. The economy is strong. The jobs numbers are strong. Now I'm seeing, of course, we might have a couple more quarter point hikes later this year in Canada. Right now we're pausing. But never base a purchase off what may happen with interest rates, and that's why you're going to buy. You're going to lock in a higher price today than tangible, and you may get a better interest rate 3 or 4 years from now when you get the keys. So I don't agree with this at all. I think you guys know how I feel about pre-sale. First off, there's not a lot of pre-sales going on in Vancouver right now anyways. In downtown Vancouver, it's almost non-existent. There's a little bit that developers are still selling in their ultra-luxury developments, which are under construction or getting completed later this year. It's a bit of a bloodbath, if I've told you guys, in a lot of these luxury condos that are currently got occupancy late last year or last summer. 15, 20, 25 listings in some of these buildings. A lot of these sellers are going to be taking a loss on these luxury units once they factor in the double dipping on the GST and their closing costs and everything else. So be very careful. Again, pre-sale can make sense in some what I call special circumstance. So it's a unit that has an unobstructed Cole Harbor view or the mountains, or an unobstructed view, southwest view of English Bay, that can't be replicated in the current tangible market. Because let's face it, in the current tangible market, it's not a gravy train. There is very little for sale. So yeah, I can start to see some investors looking maybe at pre-sale because there just isn't anything for sale in the tangible market. But I would be patient. If you really, especially for downtown Vancouver, buying pre-sale luxury, if you really want to be in that building, just wait till the building's complete in 3 or 4 years. There'll be a flood of listings, and now the units are tangible. You can negotiate the price. You can avoid the GST if you write the contract the right way. There's a lot more advantages just buying tangible product, in my opinion. And again, don't base your purchase ever on, we lock in today, buy today's prices, and in 3 years we're going to get a better interest rate. It may or may not happen. Maybe it does, but it'll probably be offset by the premium price you're paying for the pre-sale today. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. I'll see you next week.